JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 27th of November 2020. So yep, welcome everyone. Welcome to this last trading day of this week. Friday, yep. As always, guys, we're going to have a quick look at the markets, a few of the charts, just to see how everything's kind of getting along, because again, today's a bit of a different day. U.S. markets are kind of open, but yep, they only have a half day. So, and to be honest, there's not a lot of volatility. So we'll just, like I said, look at a few instruments, most of those that we looked at this morning, just to see how everything's getting along. But yeah, as always, guys, before we jump into the charts, quickly let's have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so now then, also before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, jumping into the charts. Now the first one I'm going to pick up here is the German DAX, of course. The index did push higher initially, however it still, as you can see, remains below this 13,347 territory. Now I talked about this one this morning, and what I was saying, that although yes, everything is still looking quite positive here, I would say we still need to see a nice good pop above this 13,347 territory in order to aim for some higher levels, because such a move here, a push above this barrier, would confirm a forthcoming higher high. Of course, it would straight away confirm a new high for this week. Don't get me wrong, I mean, we still have a bit of time. Maybe something might change, depends how the US will open up, and yep, let's see how all this is going to play out. But for now, we're stuck here, so I'm going to stay, I'm going to remain cautiously bullish, but as I said, I need that confirmation pop here above the 13,347 mark, so keep your eyes on that one. Now jumping into NASDAQ 100. And here you can see that NASDAQ on Wednesday had a nice run here. It did close in the positive territory, however, remained below this 12,205 zone, which, as you can see, continues to kind of continued to act as a good area of resistance, because if we look at the cash index right now, and see where the cash price is currently sitting at, and it's currently sitting at around 12,235 area, approximately around here basically. So above this hurdle, above this barrier. However, let me just quickly double check something. This high here, the current highest point of November, still is below. Basically, the price is currently above the 12,205 zone, but below the 12,268 territory, which is currently the highest point of November. If the price continues to climb higher, and if overcomes this barrier as well, then of course it creates a new high for November, and it could continue drifting higher, potentially even targeting this highest point of September near the 12,400 and well, let's round it up here a little bit, 12,440 zone, so which is also the all-time high. So let's see how all this is going to play out. For now, everything's kind of also looking quite positive. However, let's see how it behaves near this 12,268 territory. If it manages to overcome it, wonderful, higher levels could be met. But if it struggles with it, then I'll take a bit of a neutral stand, because in order to maybe aim for some lower areas, I would need to see a drop below not only the 12,000 zone, but also the 11,800 area right here, and then we could consider a move lower, so keep your eyes on that one. Now DXY, the dollar index, and you can see that the price is kind of, let's say, stuck here a little bit. It's still not even below yesterday's low, so it's still, I would say, even it's flat for today. But again, like I said, let's see how the US markets will open up and if they manage to drag this one either direction, to be honest, because again, for now, although I'm a little bit more bearish than bullish, still anything could happen, and this one could reverse back up here sharply and climb above the 92.24 territory. So let's keep an eye on this one. But again, for now, like I said, I'm more bearish than bullish. Even our indicators here, the RSI and the MACD on our daily chart, show that there is still possibility for this one to move further south. So my next target is the 91.75 territory, and then I'll take it from there. Now, center of the stage and center of the spotlight is gold, and gold didn't climb above this 1818 level, and what I was saying this morning was that if it fails to climb above it, then we might see, then all eyes are on this 200-day EMA and the 1795 territory, which, as you can see, got broken perfectly. This opened the door now towards lower areas. My next target is the 1756 territory. Now, don't get me wrong, it might not move today towards this area, it might leave it for next week, but I will get a little bit more comfortable with that idea. For example, if today the daily candle will remain below this 1795 territory, if it does that, like I said, my next target is the 1756, and then I'll take it from there. WTI oil, so nicely rebounded from this upside, steep upside support line taken from the low of the 2nd of November. What I was saying this morning, that even if we get a break of this upside line, still all eyes are on this 43.75 territory, because it could provide some support. And you can see for now it seems that none of this, I mean, this level is not really required at the moment, so the commodity continues to comfortably trade above this steep upside line. But if you think that that it has already made a decent move here to the upside, well, what you could do is probably wait for a pop above this 46.24 territory, which is the current highest point of this week, and then aim for some higher levels. So again, it's up to you guys. For now, like I said, it's sitting here. Yes, we are still leaning a little bit more to the upside. However, at this point in time, probably to get a little bit more excited with the upside, I'll probably wait for a push above the 46.24 territory right here, and then I'll aim for some higher levels. In terms of the downside, the same story, the same kind of idea remains. A drop below the 43 territory right here could do the trick for more sellers. Now, jumping into Bitcoin, and Bitcoin is drifting to the downside. Okay, so that's all in line with the idea that I talked about yesterday and today. Basically, for now, it could continue drifting lower. However, all eyes are on this little short-term upside support line taken from the low of the 19th of October, which could provide a bit of a hold up here. If it does that, then we might see this one reversing back up and climbing higher. However, in the scenario if it rebounds from this upside line, still I would probably get a little bit more comfortable with the upside if we see a move above the 17,252 territory. So basically, if we do see a hold up near this upside line, that's great. If we do see a nice rebound, that's also great. But if it climbs above the 17,252 territory, back above it, then yep, that's even better. And then we could start looking at maybe some higher levels. In terms of the downside, well, a break of this upside line is required, and then also a drop below the area somewhere around the 15,888 zone, which also almost kind of coincides with this 38.2% retracement on the Fibonacci, and then yep, lower levels could be met. So basically, let me just put an arrow here very quickly, so that we would for our future reference, let's put it this way. AUD/JPY. So the pair is at a very interesting spot. It did drift lower initially today, but as you can see, the bulls are picking up here. Of course, the equity markets, especially the US ones, are the cash indices on the US cash indices are pushing higher. It seems that there is a chance, basically, for the risk on environment to remain, and this is how and this is exactly what we are seeing here on this pair, because as we know, this pair is a very good gauge of risk on, risk off environment. So basically, if we see AUD/JPY pushing higher, then yes, that means it is a bit of a riskier environment in terms of people are willing to risk a little bit more. So that means they're jumping into equities. But however, if this pair starts drifting lower, then yep, yen buying is resumed, and everybody's jumping into a safe haven, as I said, which is the yen. So at the moment, you can see that there is some positivity here. However, as I'll still stick to the same idea, I need that push above that 77.10 zone in order to aim for some higher levels. So for now, let's keep an eye on this one. Let's keep an eye on this barrier, and let's see how all this is going to play out. USD CAD now drifting below this 1.2995 territory. All good news for the sellers. However, wait for that daily candle, because again, for now, everything is leaning a little bit more towards the downside. And as I mentioned to you guys this morning as well, that we could be seeing this as a potential kind of bearish flag. At the moment, everything's working out nicely, but let's see where this daily candle is going to end. If it stays below this area, then yes, wonderful. My next target is the current lowest point of November, near the 1.2928 zone, and then we'll take it from there. But at the moment, again, yes, we did got our break. I'm still aiming for the downside, but I'll be very, very careful, because again, I don't like trading these days. I mean, in terms of these days, these like holiday special days, because they tend sometimes to be a bit crazy, I would say. Even with low volatility, they sometimes can be a bit unpredictable. So yes, so that's why I'll just keep on monitoring this one, but I'll stay away and I'll leave this one for next week. GBP/USD. Now here it's a very interesting situation. The pound is getting weaker. Of course, the main driver here is the whole kind of Brexit nonsense, I would say, because why nonsense? Because they still cannot really reach a deal or anything like that. So yeah, of course I understand it's not as straightforward as it looks, but I mean, well, let's see, of course, how all this is going to play out. But again, it's not really working well here for the pound, especially that initially in the beginning of this week we had positive news coming out. And yes, I mean, there are hopes, there's a lot of good signs that the deal could be achieved. But as you can see, market participants do understand the reality of everything, and to be honest, the further it goes, and the more it looks that the deal could not be reached. And if nothing is reached, then well, the pound could get hammered again, in theory. For now, let's see how all this is going to play out. Again, I've mentioned this one a few times today, or actually not a few times, but once today and yesterday, that basically keep your eyes on this potential kind of rising wedge pattern, which, as you can see so far, could be working out. And we are getting that break of the lower side of the rising wedge. However, we're not really getting that drop still below the 1.3313 territory. So we need that drop here in order to aim for some lower areas. We got a test of this area. Yep, it kind of flirted with this area. Yep, but as you can see, the bulls kind of pushed the pair back up again. Everything's looking quite interesting here right now. Let's see if this rising wedge pattern will work out. If it does, then yep, lower levels here could be met. So, but again, don't rush into anything yet, guys, because we need some confirmation breaks. And finally, Euro/USD. So here we have an opposite picture. Euro/USD is pushing higher, but of course that's understandable. The weaker dollar is kind of helping the euro here to climb higher. Let's see where this pair is going to remain today. Again, what I don't want to see here is something that we had yesterday, where initially it was pushing higher, but then you can see it kind of sold off, but then it kind of got back and basically ended the day virtually unchanged. So again, yes, let's not rush into anything yet. Probably I'll leave this one for next week, and if we see the daily candle remaining above this 1.1918 level, then yes, that's wonderful. Higher levels could be met, but again, for now it's it could be tricky. And to be honest, it's Friday, like, guys, so don't overtrade, don't over kind of do it, because again, you might just go start your weekend from the wrong foot. So rather wait for Monday, and then yep, we'll pick up on this one and see what the next week has installed for us. But at the moment, guys, the everything's looking quite positive here for now on Euro USD. If the rate and the daily candle here remains above this 1.1918 level, yes, also wonderful news, and then we could start aiming maybe for that psychological 120 level again. So let's see how all this is going to play out next week. Now, guys, I'll have to wrap it up here. Thank you very much for watching and listening. I really appreciate your likes, guys, and views. I really do. So I hope you have a wonderful weekend. Stay safe. Enjoy your enjoy your weekend. Try to relax and come back fresh on Monday, and everything will be fine. So yeah, have a wonderful weekend, everyone, and see you later. Bye bye.